You're live.
Yeah.
Join the community of more than 2 million economists. One.
Yes, hello, my dear friends. Very good evening and a warm welcome on a fine Sunday to have a great round of revision and complete marathon of our GST CA indirect tax laws. And of course, it's CA inter level. What we have got is only GST. It's worth for about 40 marks. And I'm sure we guys know very clearly that every mark will have got a weightage and every mark will make a difference when it comes to our exam. Right? So without any delay, let's spend some very good time on discussion about a lot of interesting concepts in our GST. And basically, the whole idea of this session is only one line answer. That is, we just want to make sure that we guys get a complete clarity of thought on the concepts what we learned. We'll just brush up our concepts. And at the same time, if there is some concept where we just miss out some conceptual clarity, that also can be enlightened in the course of the discussion. And at the same time, if you have got any doubt anywhere, feel free to comment in the chat box. I'll be more than happy to reply. I'm able to see all your chat box. So very good evening, my dear friends. A very good evening. Ciao. Yes, so YouTube chat box is available for me. You can comment all your queries in the chat box. I'll be more than happy to reply, guys. So let's make use of this time very productively. I know Sunday evening time, but still something very precious time. So let's make use of this time so that we get a great amount of learning and a good amount of revision. Clear? And response strategy, what we have planned in order to make sure that we don't tend to miss out on any topic. What I have decided to do is, my dear friends, that is, we have got our individual notes, individual material with us. So during the course of our revision, we will practice and understand through our material itself so that we don't waste much of our time in writing down the notes. It'll be more easy and more convenient for us to understand the things more easily from our notes, because our notes is more of simplified, customized manner in terms of a lot of charts and other stuff. So it's easy for us to revise. So let's make use of our material and our notes and let's revise using our material. Come on, friends. Let's begin. So first, let me start off with the discussion about the first topic, that is your basic concepts. That is about the story of GST in India and introduction. First of all, my dear friends, as we know that GST is an indirect tax. What is an indirect tax? So direct tax is a tax where impact and incidence is on same person. Indirect tax is a tax where impact and incidence is on different person. This basic concept we all know, right? That is, direct tax is the tax where impact and incidence is on same person. Indirect tax is the tax where impact and incidence is on different person. Impact means who is liable to pay. As we all friends, GST is an indirect tax. Please don't think that GST is a direct tax. It's a very clear-cut point that GST is an indirect tax. Good. Even though they told one nation, one tax, one nation, one tax, don't think that income tax is gone. Income tax is still there. It has got some good amount of weightage in our exam also. Right. Some student is asking, sir, will this video be there on YouTube till exam? Yes, we'll put this video till exams. Don't worry. But first listen now. That's very important. Yeah. So that, see, my only point is that you can watch out the video subsequently also. But when you participate in the discussion now itself, any doubts you get, you can feel free to come back and ask me, which will be more and more convenient for you. That's the whole idea, friends. So let's start. So direct tax is the tax where impact and incidence is on different person, which is imposed directly on the taxpayer and paid directly to the government. Indirect tax, we all know the beautiful point in indirect tax, that is, it is the one that can be shifted by the taxpayer to someone else. Classic example, my dear friends, in case of, let's take an example that there is a restaurant where we go and pay GST in the restaurant. Now, who is liable to pay GST? Let me honestly tell you, who is liable to pay GST? Who is liable to pay GST is the restaurant owner. Who is liable to pay GST is actually the restaurant owner. Restaurant owner is liable to pay GST, but he will actually collect from customer. So restaurant owner is liable to pay GST, but he'll actually collect from customer. The reason for that is because it's an indirect tax. Tax burden can be shifted to the consumer. Tax burden can be shifted to the consumer. Clear, friends? Done. Fantastic. Next slide. Also called consumption tax. So this line is an interesting concept. Let me take 2 minutes of your time and explain you slightly in detail about this concept. Sir, GST. Let's say, for example, there is one person, Mr. A, who is in Telangana state. One person, Mr. B, who is in AP. Mr. A has supplied goods to Mr. B of AP. In fact, my dear friends, let me tell you, prior to GST, the kind of tax what was charged was central sales tax. In case of interstate sale of goods, CST was levied, central sales tax, which was levied by central government. CST was levied by central government, but collected by the state government. CST was levied by central government, collected by state government. But let me tell you, my dear friends, after GST, in case of this transaction is known as interstate supply of goods, IGST is being levied. I'm sure this concept we know that there are two types of supply known as intrastate supply and interstate supply. Intrastate supply, we charge CGST and SGST. Interstate supply, we charge IGST. So if the rate of GST is 18%, we charge 9% and 9%. CGST and SGST. But if it is interstate supply, directly we will charge IGST 18%. I'm sure this basic point you all know, my dear friends. But one clear-cut special point which I definitely want to remember is something like this, my dear friends. That is, prior to GST, CST was levied. What was CST? Central Sales Tax. And this CST was levied by central government, collected by state government. Which state collected that money? Let me honestly tell you, that money was collected by Telangana state. In other words, CST was collected by seller state. CST is levied by central government, collected by state government, and the money was taken by seller state. But in GST law, the concept is totally different because GST is a destination-based consumption tax. Come on, friends. GST is what tax? GST is a, let me write this word. GST is a destination-based consumption tax. When I say destination-based consumption tax, that means the tax will go to that state. I repeat, my dear friends, GST is a destination-based consumption tax. That means tax will go to that state where the goods or services are consumed. I repeat once again, my dear friends, tax will go to that state where goods or services are consumed. So wherever goods or services are consumed, to that state, the amount of tax will go. For example, when Telangana person is supplying goods to AP, this transaction is an intrastate supply on which IGST is levied. And let me honestly tell you, IGST amount is taken by central government and then shared with the state government. And that too, that is shared with the consumption state, because GST is a destination-based consumption tax. Don't forget that word. That word is very important. Destination-based consumption tax. Next point. Moving back. Right. And indirect taxes witnessed a paradigm shift on which date? July 1st, 2017. This date we know very clearly that GST has come to India on 1st of July 2017, and wherein various indirect taxes have been conglomerated into one nation, one tax, that is GST. But GST is not a conglomeration of direct taxes. GST is only a conglomeration of various indirect tax laws. Next point. There are several central and state taxes which got subsumed under GST. And what are the several state indirect taxes? Several state level, central level taxes. Something like what, my dear friends? Something like central excise duty, service tax, VAT, CST, luxury tax, entertainment tax, octroi, entry tax. Like this, so many taxes were there. There were multiple indirect taxes which is levied. But now it's only one nation, one tax, that is GST. In fact, let's take a small example, guys. Once upon a time, if a product is manufactured, we were required to pay excise duty. And again, when the same product is being sold, we were required to pay VAT or CST. So on manufacture, there was excise duty being levied. And on sale of the product, again, VAT or CST was levied. But let me tell you, under GST law, there are no multiple taxes. It's only one nation, one tax. That's it. Clear? Next point. GST extends to whole of India, including Jammu and Kashmir. In fact, my dear friends, for your knowledge, let me tell you, initially when GST started on 1st of July 2017, it was applicable to whole of India except Jammu and Kashmir. But 8th of July 2017, Jammu and Kashmir also have given their consent for GST. And technically, with effect from 8th July 2017, GST became applicable to whole of India, including Jammu and Kashmir. Including Jammu and Kashmir. Yes, next point. And India covers what? Territory, of course, territorial waters up to 12 nautical miles, continental shelf up to 200 nautical miles, exclusive economic zone, soil underwater, and also the airspace. That means if you have done some activity inside the water, on the water, in the sky, anywhere, that is all still a part of India. And you will still be required to pay GST, no doubt about it. Next. This is the whole genesis of GST, my dear friends. The idea of GST started in 2000, and there was a committee formed which was headed by Vijay Kelkar in 2003. And committee gave a report that GST is fantastic for India. Please do introduce GST. And Chidambaram, that time finance minister during 6-7 budget, he told that he will bring GST from 2010. But in 2014, the NDA government, that is the Congress NDA government, tabled the constitution bill on GST by the then finance minister Arun Jaitley from BJP. Correct? Then on 27th March 17, bill was introduced in Lok Sabha and Rajya Sabha. 29th March, GST was passed by the Parliament. 12th April, President assent was received. And finally, from 1st of July 2017, this historic indirect taxes reform, that is nothing but GST, goods and services tax, have been brought into the picture. It's obviously an historic tax because earlier, my dear friends, there were so many taxes which were levied by central government, and there were so many taxes which were levied by state government. But for the first time, I repeat, for the first time in the history of India, some tax has been brought which is levied by center and state together. That is the reason why we always say that GST is one of the biggest reform India has ever seen. Obviously, no doubt about it. Next. In fact, my dear friends, don't please think that India has invented GST. France was the first country to introduce GST way back in the year 1954. And more than 160 countries across the world have already introduced GST. And in India, we did not copy France model. We have copied Canada model. That model is called dual GST model. As I was telling you that there are two types of supply known as intrastate supply, intrastate supply. For intrastate supply, we charge CGST and SGST. CGST and SGST. That's why it's called dual GST model. And for intrastate supply, we charge IGST. For intrastate, CGST and SGST. For interstate, IGST. Then, this part already I told you, GST is a destination-based tax. CGST, SGST, and of course for union territories where there is no state legislature, UT GST is levied. That means instead of CGST and SGST, CGST and UT GST is levied. And of course, intrastate supplies, IGST will come into picture. So there are two types of supply known as intrastate supply, intrastate supply. For intrastate supply, we'll charge CGST and SGST. For intrastate supply, CGST and SGST. And for intrastate supply, IGST will come into picture. Make sense, guys? Very good. Next. Intrastate supply, CGST and SGST. Intrastate supply, IGST. A quick, short summary. And there is a single legislation, CGST Act, for levying CGST. Similarly, union territories without legislatures are governed by UT GST Act. Now, what are the examples for those? Andaman and Nicobar Islands, Dadra and Nagar Haveli, Chandigarh, Lakshadweep, Daman and Diu, Ladakh. And there are some union territories where there is own legislature, something like Delhi and Puducherry. In fact, Delhi and Puducherry are not states. They are union territories only, but they have got their own state legislatures. Getting clarity, friends? So in case of union territories without state legislature, it is CGST and UT GST. But in case of union territories with state legislature, CGST and SGST, that's a differential point what you have to keep in mind. Which point? Though there are multiple SGST legislation, the basic features of the law, such as chargeability, definition, event, taxable person, classification, valuation, everything remains same. Same, no doubt about it. And in fact, my dear friends, as I told you 2 minutes back, that prior to GST law, there were some taxes levied by central government, there were some taxes levied by state government, but there was never a tax in India levied by central and state together. That is the reason why they had to amend the constitution also to bring GST into India. And they brought Constitution 101st Amendment Act 2016. What is that word, sir? Constitution 101st Amendment Act 2016. And I'm sure you guys know very clearly about Article 265. What is that? No tax shall be levied or collected except by the authority of law. Government cannot just like that. Government cannot just like that impose or levy any tax except with the authority of the law. So if government is collecting some tax, they should have got that power from a particular statute or a particular law. Only then they can impose any taxes in India. Next. Part 11 of the Constitution deals with relationship between union and state. Power of enacting the laws is conferred on the Parliament and the legislature of the state. Next. Article 246. It gives respective authority to union and state for levying tax, whereas Parliament may make laws for whole of India or any part of territory of India. State legislature may make laws for the whole or any part of the state. Obviously, Parliament will have power with respect to the entire country as a whole, but state legislature have got power only with respect to that particular state. That's quite obvious. Makes sense, right? Speak out, friends. Exactly, no doubt about it. Something very interesting and very much sensible. Constitution which Act? 101st Amendment Act. Then, 7th schedule to Article 246. Friends, have you heard about 3 lists? Union list, state list, concurrent list. Union list contains those matters on which power is there with central government to levy the tax. State list contains those matters on which power is there with state government to levy the tax. And what about last one, concurrent list? Power is there with both central and state government. Power is there with both central and state government. Exactly. Makes sense, my dear friends. So what are 3 lists? Come on. The 3 lists are union list, state list, concurrent list. Union list deals with those matters on which power is there with central government. State list deals with those matters on which powers are there with state government. Concurrent list deals with those matters where power is there with central and state together. That's an interesting point. And please do remember this 3 list. Extremely important. Yeah, thank you. This is what I was talking with you. Union list, state list, concurrent list. Come on. Union list matters. Who has got power, my dear friends? Parliament. That's nothing but central government. And what about state list matters? State list matters. Power is there with state government. Concurrent list matters. Power is there with both central and state government. Friends, getting clarity? And now what is the interesting point here? What is the need for constitutional amendment? A small question may come in exam for 2 marks. Why was the constitution amended? The answer can be very, very simple like this. That is, prior to GST law, there were separate powers given to central government and state government to impose the taxes. There were some certain specific taxes levied exclusively by central government, certain specific taxes levied exclusively by state government. But the first time in the history of India, some tax has come up which is levied by central and state together. So in order to bring that dual power, to central and state together, there was a need to amend the constitution. That's a clear-cut interesting point. Next point. What are the taxes that have been subsumed under GST? This is also an interesting point. Come on, what are taxes combined in GST? If I look at central level taxes, what is that? Excise duty, additional excise duty, service tax, then CVD, special CVD, central sales tax, central surcharge. State side, sales tax, VAT, luxury tax, entertainment tax, tax on advertisement, tax on betting, gambling, lottery. Wow, surcharge and cess. In fact, like this, there were so many multiple taxes existing prior to GST. But all that multiple taxes have been combined into one nation, one tax. That is nothing but GST. I hope this point makes sense to everybody. Friends, come on, please reply. Yes, fantastic, lovely. I just love the participation. Very good. Come on. So, friends, what are central level taxes subsumed under GST? Excise duty, service tax, and central sales tax. So, like this, multiple taxes were there which have been subsumed under GST. State level, state VAT, luxury tax, entertainment tax, purchase tax, whatnot, advertisement tax, betting, gambling, lottery, state surcharge and cess. So, like this, multiple taxes have been subsumed under GST to make it one nation, one tax. Before, when we used to go to movies, entertainment tax was levied. When we used to go to a lot of star hotels and all, luxury tax was levied. In case of betting, gambling, there was separate tax levied by state governments. Next point, where I definitely want to discuss some interesting point, that is definition of GST, my dear friends. In fact, my dear friends, there is one such product where a lot of state government gets huge revenue, my dear friends. Huge what? Revenue. That is basically, my dear friends, alcohol liquor for human consumption. What is that word? Alcohol liquor for human consumption. And in fact, in definition of GST, they have clearly given that GST is a tax on. GST is a tax on supply of all goods. GST is a tax on supply of all goods or services or both, except alcoholic liquor for human consumption. GST is a tax on supply of all goods or services or both, except alcohol liquor for human consumption. And let me tell you, my dear friends, there are 5 petroleum products which have been temporarily kept outside GST. That is petroleum crude, high-speed diesel, motor spirit, natural gas, and aviation turbine fuel. So getting clarity, my dear friends? So what are 5 petroleum products? Petroleum crude, high-speed diesel, motor spirit, natural gas, aviation turbine fuel. These 5 petroleum products have been temporarily kept outside GST. Next. Article 279A. This is about GST Council, my dear friends. Let me tell you in a simple language about GST Council. Friends, let me tell you, under GST law, any change related to GST, under GST law, any change related to GST is done by the central government only on the recommendations of GST Council. Any change related to GST is done by the central government on the recommendations of GST Council. Now, question is about who are there in GST Council? In GST Council, there are members from center, members from state. From center side, let me tell you, there are 2 members. Number 1, Union Finance Minister. Number 2, Minister of State for Finance. So the first one, Union Finance Minister. Second one, Minister of State for Finance. And this Union Finance Minister will act as chairman of GST Council. And from state side, we have got every state representative. Don't always think every state finance minister. It is basically every state representative. Come on, center side 2 members. Who are 2 members? Union Finance Minister. Second, Minister of State for Finance. And from state side, we have got every state representative. Every state representative. Now here, an interesting concept I've got, my dear friends. What is that? Listen carefully. That is, law specified that center has got a weight of 1/3 weighted vote. That means for some particular matter or for some particular decision, if center says yes, 1/3 is done. And from state side, if you look at all states together, they have got 2/3 weighted vote. I repeat, my dear friends, all states, what's it? Together, they have got 2/3 weighted vote. Come on, my dear friends. Center alone has got a weight of 1/3 and all states together 2/3. But one great point to be noted, which I'm sure most of you are already aware about it, that is to pass a resolution. Resolution means what? To take some decision. To take some decision, there should be 3/4 majority. When I say 3/4 majority, that means 75% of them should accept it. Only then resolution is passed. Now let's take a small example to understand this. Let's say for some issue, center told yes. And state side, 24 attended. How many attended? 24 attended and 18 said yes. Then if center told yes, how much is done? 1/3 is done. And from state side, if you look at what is the ratio they have got, 2/3 weighted vote they have got. How many said yes? 18 said yes. Out of how many? 24. 24. That means what? This is also 33 point. No, not 33.33. This is 36/72, which is 50%. And this is 33.33%. Total together 83.33%. Resolution is passed. Because ultimately the important language is that any decision is taken, any resolution is passed, only if there is. Any decision is taken, only resolution is passed, only if there is 3/4 majority. So you have to please observe that center has got a weight of 1/3. All states together, there is a weight of 2/3. But a resolution is passed only when there is a 3/4 majority. This concept is very interesting. Come on, friends. If center says yes, how much is done? 1/3 is done. All states together say yes, 2/3 is done. But to take any decision, there should be 3/4 majority. So how much is required? 75% is required. That means you have to observe some interesting concept here. That is, center alone or state alone cannot take decision independently. Very, very interesting. Such a brilliant concept. I hope we got a clarity, my dear friends. Yes, are we clear? Fantastic. This I have to remember, my dear friends. Very, very interesting. High possibility that a question may come in the exam. Come on. What is center weight? Center weight is what? 1/3. States weight. All states together 2/3. But to pass resolution, there should be 3/4 majority. Clear? Done. Next. Going back. And there are some important definitions, my dear friends. Always keep these points in mind. GST is a tax on supply of all goods, services, or both, except tax on supply of alcohol, liquor for human consumption. This is, of course, an important point. GST is a tax on supply of all goods or services or both, except alcohol, liquor for human consumption. And always remember the definition of goods and all. Goods definition, service definition, actual claim definition and all. And what are the benefits of GST? Of course, GST avoids something called cascading effect of taxes, and GST promotes more of transparency into the picture. And one nation, one tax, of course, no doubt about it. And this concept already we learned. That is, GST is a tax on supply of all goods or services or both, except alcohol, liquor for human consumption. And how many petrol products are outside GST? Let me tell you, there are 5 petroleum products which are outside GST. Petroleum crude, high-speed diesel, motor spirit, natural gas, aviation, turbine, fuel. And real estate sector, when I wrote, always remember, here we are talking about sale of land or building. If we sell land or building, there is no question of GST. But for construction services, there is GST. If it is sold prior to occupancy certificate, even if a single rupee also is received prior to OC, then GST will apply. If the entire amount is received after OC, then GST may not come. But even if a single rupee also received prior to OC, then GST will definitely apply. Getting clarity, friends? Excellent. Next. That's it. In fact, these are the various interesting, important concepts. What you have to keep in mind definitely with respect to the first topic, that is the story of what, my dear friends, basic concepts. I'm sure that makes sense to all of you. Done. Without delay, let me proceed to the topic of supply, which is, of course, very interesting. Done. The topic of what, my dear friends, supply. Friends, I'm sure you guys, everybody who's listening to me right now knows very clearly that this supply topic is very important. Why it is very important? The reason being very clear that prior to GST law, there were interesting words called sale of goods, purchase of goods, providing services, rendering services. Like that, different words were there prior to GST. But under GST law, the taxable event is only one word, that is supply. If a transaction is supply, only then GST will apply. If the transaction is not a supply, then GST will not apply. Wow, brilliant language. Come on, what did I say? If a transaction is supply, only then GST will apply. If the transaction is not a supply, then GST will not apply. So it is very important to know what is the meaning of this word supply. Defined by one beautiful section called Section 7. See now. Let's start, come on. The first part of the story, Section 7(1)(a), which clearly says supply includes all forms of supply of goods or services or both, such as sale, transfer, barter, exchange, license, rental, lease, or disposal. Come on, what's the language, my dear friends? Sale, transfer, barter, exchange, license, rental, lease, or disposal, made or agreed to be made for a consideration by a person in the course or furtherance of business. So in order to call it as supply, it must be like a sale or transfer or barter or exchange or any kind of license or renting or leasing, which is made or agreed to be made. That means it is done or to be done. For what? A consideration. There should be consideration for sure, which could be in monetary form or non-monetary form, but it should be in the course or furtherance of business. Then let me ask you one question. So let's say Shiva Teja decided to exchange his gold ring. I decided to go to a gold shop, give my old gold ring, and from the gold shop, I purchased a new gold ring, for which I paid some extra money also. That is clearly a case of exchange transaction. Now tell me, from Shiva Teja's point of view, is that transaction a supply? It is exchange, but definitely it is not a supply, because Shiva Teja's point of view, it is not in the course or furtherance of business. But from the jewelry dealer or the jewelry shopkeeper point of view, definitely the transaction is supply, because for him, it is in the course or furtherance of business. So that word is very, very important, course or furtherance of business. Now don't get a doubt. So what is the difference between course and furtherance of business? Course is something like doing what you are doing. Furtherance is something like expansion. So supply includes all from the supply of goods, services, or both, such as sale, transfer, barter, exchange, license, rental, lease, or disposal, which is made or agreed to be made for a consideration by a person in the course or furtherance of business. Next, second point, importation of services. What is second line, my dear friends? Importation of services. We are importing services from outside India for a consideration. Consideration is there, whether or not in the course of furtherance of business. That means even though it is not in the course of furtherance of business, still the transaction regarded as supply. Let me give a classic example. when we talk about an OTT platform known as Netflix, Netflix is actually not in India, it's outside India. When we take subscription of Netflix, we are taking service from outside India, but we are not taking for personal purpose. We are not taking for business purpose. We are taking for personal purpose. But still, the transaction is regarded as supply. But still, the transaction is regarded as what, my dear friends? Supply. The reason for that point is very clearly 7.1b. 7.1b. Import of services for a consideration, whether or not in the course of furtherance of business. Getting clarity? Import of services for a consideration, whether or not in the course of furtherance of business. Then finally, last point, activity specified in Schedule 1. This point is important. 7.1c. Why it is important? Because there are some transactions, I repeat, there are some transactions which are regarded as supply. There are some transactions which are regarded as supply, even though there is no consideration. Come on, friends, what is the language I wrote? There are some transactions regarded as supply, even though there is no consideration. Very, very popular concept. High possibility that question can come. Number 1. What is the point, guys? Permanent transfer or disposal of business asset on which ITC is claimed. So if you have sold or you have disposed any business asset could be fixed asset or it could be stock in trade on which you have claimed ITC, that is still regarded as supply, even though there is no consideration. And second point, most popular point. Supplies between distinct or related persons in course or furtherance of business. Who are distinct persons? Friends, come on. Who are distinct persons? Distinct person is something like PAN is same, but GST number is different. What is the language, sir? PAN is same, but GST number is different. We call them as distinct persons. The reason for that language is very clear that we all know, my dear friends, that under GST law, registration is given state-wise, but not centralized. For every state, you are required to obtain separate registration. So, for example, if there is a bakery which has got a registration in Telangana and has also got registration in Maharashtra, if some biscuits are being transferred from Telangana to Maharashtra, it is clearly a case of stock transfer. Even though it is a stock transfer, still it is regarded as supply as per GST law. Even though it is a stock transfer, still it is regarded as supply as per GST law. That's a very clear-cut point given in the law. Come on, friends, what is the first point? Permanent transfer or disposal of business asset on which ITC is claimed. Permanent transfer or disposal of business asset on which ITC is claimed. Second one, supply between distinct or related persons in the course or furtherance of business. Third one, transfer of goods. Transfer of goods from whom, sir? Principal to agent. So if there is any goods which are being transferred from principal to agent, that transaction also is regarded as supply, even though there is no consideration. And finally, last one, import of services. Come on, what we are importing, my dear friends? Import of services by a person from related person in the course or furtherance of business. So it is important to be kept in mind that it should be in the course of furtherance of business. Getting clarity, friends? So these 4 are the interesting cases given by 7.1c read with Schedule 1, which deals with the concept of transactions regarded as supply, even though there is no consideration. Something important. Yeah. Some question. Sir, if I get services from foreign, it will be supply for foreigner. But here, does it mean that it will be supply for me also? My dear friend, please understand that whenever supplier is outside India, receiver is in India, it is import of service, it is transaction is covered under a reverse charge mechanism. If supplier is located in non-taxable territory, receiver is located in taxable territory, that transaction is covered under RCM. I hope your question is clarified. Yes? Excellent. That's the answer for your question. So friends, 7-1C ready with schedule 1. What is the story, my dear friends? There are 4 interesting points which are regarded as supply, even though there is no consideration. What are 4 points? First one, permanent transfer or disposal of business asset on which ITC is claimed. Second, supply between distinct or related persons in the course of furtherance of business. Third, transfer of goods from principal to agent. Fourth one, import of services by a person from related person in the course or furtherance of business. I hope we are getting clarity on this point. Which section all this? 7-1C, ready with schedule 1. Yes, one more question. Sir, does foreign regarded as non-taxable territory? But madam, let me tell you, madam or sir, let me tell you that what is taxable territory? Taxable territory means basically a part of India. Non-taxable territory means outside India. So if an outside India person is giving service to an Indian person, that is very clearly covered under RCM. No doubt about it. That is covered under reverse charge mechanism. Clear? Good enough. Sure, next. Next point. This point you see, my dear friends. Come on, what is this point? Artworks. What works? Artworks. Artworks, something like a design or some painting or some artistic works. Yes, friends. Artworks sent by whom? Artist to galleries as exhibition is not a supply, as no consideration flows from the gallery to the artist. Obviously, very clear-cut point. Whenever any artist is taking some artworks to the gallery, it is not a supply. This also you have to see, my dear friends. GST is not leviable on gifts or donations if it is made to a charitable organization and the nature of gift or donation, and the purpose is only philanthropic and not for advertisement. Now read the line below. When the name of the donor is displayed in the recipient premises as an expression of gratitude, and not aimed at giving publicity to the donor in such manner that it amounts to advertising of his business, then there is no supply of service for consideration. Very interesting point. So for example, when we talk about a case of temples, where we go to a temple and in the temple we make some donations, and there out of love and affection or out of gratitude, they might display my name. Shiva Teja donated 10 lakh rupees, Shiva Teja donated 1 lakh rupees or 10,000 rupees, whatever it is. They mention that. Now I did not donate that because I want to get any commercial gain. But there, if I tell them that I'll give you this much money, but you have to display my name, my phone number, my address, that I'm at classes, Shiva Teja classes, Indigo Line classes, all that I told, then indirectly I'm getting some benefit in the form of advertisements. Then it becomes a supply. So that's where they clearly told that if it is expression of gratitude and it is not aimed at giving publicity, then it is clearly not a supply. Good. Next. Some question. Sir, family includes what? Let me tell you this word family is defined in the law by section 249. Family covers 2 categories. 2 points are covered in the family. 1, spouse and children. Spouse and children are always covered in definition of family. Second one, parents, grandparents, brothers and sisters. If they are wholly dependent, wholly or mainly dependent. Clear? So parents, brothers, sisters are covered only if they are dependent, wholly or mainly. But spouse and children are always covered in related persons. Parents, brothers, sisters are covered only if they are dependent, wholly or mainly dependent. I hope your question is answered. Yeah. Next point. Any subsidy given by central government or state government is not considered. In fact, this point you would have heard in about value of supply chapter also. In value of supply, any subsidy is included except subsidy from central government or state government. Next point. Deposits shall not be considered as payment made for such supply unless supplier appropriates such deposit as consideration. For example, when we take a property on rent, so we might be required to pay rental deposits. That rental deposit is not income for the landlord. When it will become income for the landlord? Only when that amount is adjusted. Only when the amount is what, sir? Adjusted. Only then it becomes a consideration for the landlord. If not, it will not become a consideration. Clear, everybody? Good enough. Next. This point's done. 7A done, 7B done. 7.1C related to Schedule 1. We just discussed that. So what is 7.1C related to Schedule 1? Transactions regarded as supply even though there is no consideration. Transactions regarded as supply even though there is no consideration. Yes. And what is 7.1B? Import of services for a consideration whether or not in the course of furtherance of business. Next point. This point we just discussed. Yeah, this is what I was talking about. Sometime back you asked about the word family. Family means spouse and children, always covered. And second, parents, grandparents, brothers, sisters, only if they are wholly or mainly dependent. Only then they are covered in related persons. That point is very, very interesting and important. Yes, next one more question. Sir, subsidy received from cooperative society. Let me tell you, subsidy received from central government or state government. Subsidy from central government or state government is not included, but any other subsidy is considered for determining value of supply. Next point. One more question. Sir, does donation given by political party come under consideration? See, donation story is totally different. We are talking about subsidies linked to price. Now, what is covered in value of supply? In fact, as per section 15(2)(e), inclusions in value of supply, there is a point which talks about any subsidy linked to the price. Any subsidy linked to the price except subsidy from central government or state government. So when we receive subsidy, we will not include that in value of supply. However, if we get it from other than central government, state government, then we'll definitely include a value of supply. So central government, state government is not included. Other than that, it is included. Next, one more question. Sir, in case of supply without consideration, does issuance of invoices mandatory? If yes, for which value? My dear friend, let me tell you, in case where there is no consideration, but still regarded as supply, that is covered in 7.1C. And for that, how do we do the valuation is given by valuation rules. There are specific set of rules, rule 27, 28 and all, which deals with valuation in those cases. And that is there at CA final level. Make sense? Good enough. Come on, next. Supply of goods services between employer and employee. Whatever is given as a part of employment, on that GST will not come into picture. But what is not a part of employment, on that GST will apply. But one point they told in the law is that gifts up to 50,000. Gifts up to what value, sir? 50,000. A small question can come in the exam for 2 marks. So please do keep in mind. Gifts up to 50,000 in value in a financial year by an employer to employee shall not be treated as supply of goods or services or both. And what is the meaning of this word gift is not defined in the law. That is the reason why generally what we understand is that gift is made without consideration and is voluntary in nature and is made occasionally. Obviously, daily they will not give that. And it cannot be enforced in the court of law. That is a point to be noted regarding the word gift. Next. This is all about principal and agent. Yeah, this part you see, friends. Yes, one more question somebody is asking. Sir, what about stepdaughter, stepbrother? Yeah, let me tell you very clearly, there's nothing given in the law with respect to stepdaughter, stepbrother and all. So indirectly, that means that that is included. So law is silent about it. So we always presume and understand that it is always included. Next. What is covered in supply of goods and supply of services? Please see that transfer of title in goods. Transfer of what? Title in goods. Then only we call it as supply of goods. But if there is transfer of, if there's a transfer of right, if there's a transfer of right without transfer of title. See that language? Transfer of right without transfer of title. Then we call it as supply of service. Only if there is a transfer of title, only there is a transfer of title, we call it as what? Only there is a transfer of title, we call it a supply of goods. If there is a transfer of right without transfer of title, we call it a supply of services. Good, next. The student is asking, so I can explain principal and agent. Sure, I'll tell that. Next. Adopted son. As I told you already, they only told spouse and children. They never spoke anything about which son, what kind of son and all. So he should be covered. And grandchildren, nowhere is covered in the definition of family. Next. Principal and agent, let me tell you a small example. Now, who is an agent? Agent is somebody who supplies the goods to the customer on behalf of principal. Agent is somebody who supplies goods to the customer on behalf of principal, for which agent will earn commission income. Correct or not? Now, the point to be noted here is that if invoice is given by agent to customer, come on, what is the language? If invoice is given by agent to customer in his own name, if invoice is given by agent to the customer, if invoice is given by agent to the customer in his own name, then one line answer, P2A is taxable. P2A is taxable means principal to agent is taxable. The transaction between principal to agent is taxable. But if invoice is given by agent to customer in the name of principal, then P2A is not taxable. So the point to be noted here is that the transaction between principal to agent taxability will depend upon on whose name agent is giving invoice to the customer. If agent is giving invoice to the customer, I repeat, my dear friends, if agent is giving invoice to the customer in the name of agent, then transaction between principal to agent is taxable. But if agent is giving invoice to customer in the name of principal, then transaction between principal to agent is not taxable. Yeah, one more question. Sir, can you say what is del creditor agent? Same concept, but del creditor agent is somebody who will undertake the responsibility of recovering money from the customer, for which he gets extra commission. That's called del creditor commission. You would have learned that in accounts. Next. Second, explain related party transaction. Let me give a small example for related party. Shiva Teja. There is Mrs. Shiva Teja. I gave a gift to my wife on the occasion of marriage anniversary. Do you think the transaction is supplying? Are we both related persons? 100% answer is we are related persons. But is it supply? No. The reason because supply between distinct or related persons. Come on, friends. What is the line, sir? Supply between distinct or related persons in the course or furtherance of business is regarded as supply, even though there is no consideration. But please understand that. Imagine a case where Shiva Teja is taking some GST class for Mrs. Shiva Teja without consideration. That means what? That's a case where it is being made in the course of furtherance of business. Then definitely it becomes taxable. So supply between distinct or related persons in the course or furtherance of business. Supply between distinct or related persons in the course of furtherance of business is regarded as supply, even though there is no consideration. Make sense? Good. One question student is asking. Sir, P to a white is not taxable, sir. Sir, please understand that if agent is giving invoice to the customer, in principal name, then principal will pay tax, no? Obviously, right? And obviously, please understand that for principal to agent, first if tax comes, and agent to the customer, again, if principal name invoice is given, again, principal will not pay tax, no? There cannot be double tax for the transaction. There cannot be any double tax for the same person. That's where they clearly told in the law, transaction between principal to agent taxability will depend upon how invoice is given by agent to the customer. If invoice is given by agent to the customer in agent's own name, then principal to agent is taxable. But if invoice is given by agent to the customer in principal name, then principal to agent is not taxable. I hope we are getting clarity on this point. Exactly. Very wonderful. Good. Next, going back. So where are we, my dear friends? We were talking about what is supply of goods, what is supply of service. In order to call it as supply of goods, there must be a transfer of title. But to call it as supply of service, there is a transfer of right without transfer of title. There is a transfer of right without transfer of title. Then we call it as supply of service. This point you have to please keep in mind. That we call a transaction as supply of goods only if there is a transfer of title. But if there is a transfer of right without transfer of title, then we call it as supply of service, my dear friends. Are we clear with this concept, everybody? Wonderful. Let's proceed. Next. Land and building, leasing of land, renting of land, that is all clearly supply of service. Then any catering, food activity, or job work. Friends, what is job work? Job work is a case where we give the materials and get the work done. When we give the materials and get the work done, that is also clearly known as supply of service only. Let's take a classic example. We go to a tailor and give a shirt cloth piece and ask him to stitch a shirt and give it back. What activity the tailor is doing is technically known as job work. And that transaction is known as clearly a supply of service. And transfer of goods, obviously, supply of goods. Next point, if the owner ceases to be taxable person, that means he is foregoing his registration. Sir, we know that registration is mandatory in general when aggregate turnover exceeds 10 lakh, 20 lakh, 40 lakhs. But on fine day, if he is going for cancellation of registration, law is telling, please get yourself cancelled, no problem. But whatever stock is there, on that stock, please pay tax and then walk out. And that is clearly known as supply of goods. No doubt about it. Renting of property, that is supply of service. Construction of a complex where consideration is received before completion certificate or occupancy certificate, that is also supply of service and it becomes taxable. Next. This point is important. Works contract service with respect to immovable property. So what is this word? Works contract service. So for example, let's take a situation like this. I call one painter. I give a paint box to him. and tell him, boss, you please paint this entire room. Now what he is doing is only service, right? Now I go to a paint shop, purchase one paint box. What is he giving me is only goods. Third scenario, I go to a painter, tell him, boss, you only get the materials and you please do the painting also. Tell me how much lump sum should I pay? That contract is called works contract. Works contract is a contract where there is element of goods as well as service. And under GST law, this word works contract is only in relation to immovable property. And any works contract service in relation to immovable property is regarded as supply of service. Any works contract service related to what? Immovable property is regarded as supply of service. Next one. Supply by way of food, being food or any article for human consumption. Classic example, restaurant service. Restaurant activity is deemed to be service. Prior to GST law, they told that in restaurant, there is supply of goods and also there is supply of service. That is where both VAT and GST were being levied in case of restaurant service, restaurant, my dear friends. But under GST law, they clearly clarified that restaurant activity is deemed to be service. Making sense? Brilliant. Next. Negative list in GST. So we're talking about those cases where transactions which are neither regarded as supply of goods nor regarded as supply of services. So let me tell you, there are some transactions given by section 7.2 read with schedule 3, which deals with the concept of transactions which are neither regarded as supply of goods nor regarded as supply of service. That means it is not supply of goods, it is not supply of service. What are those? First one, services by an employee to the employer in the course of or in relation to employment. That is the reason why practically no salaried employee pays GST. But we discussed an interesting point. Gifts up to 50,000 in value in a financial year is not supply of goods. But if it is more than 50,000, then definitely GST will apply. Clear? Next point. Services by court or tribunal. Next. Functions performed by MPs, MLAs, Parliament, Prime Minister, President, Chief Justice, Speaker. These all services are neither regarded as supply of goods nor regarded as supply of services. Next one. Funeral, burial, crematorium, mortuary, including transportation of deceased. Next. Sale of land and sale of building. That is also not supply of service, not supply of goods. For the first one, service by employee to employer in the course of employment. Second, services by court or tribunal. Third, services by MPs, MLAs, or any public servant like Prime Minister, President, Chief Justice, Speaker. These all are not regarded as supply of goods and not supply of service. Fourth point, services of funeral, burial, crematorium, mortuary, including transportation of deceased. Next, fifth point, sale of land and building. That is also not taxable. Then finally, actionable claims other than betting, gambling, lottery. So for betting, gambling, lottery, GST will apply. And for other actionable claims, GST will not apply. Now, what is actionable claim? Actionable claim is basically a claim which can be actioned in the court of law. For example, you have given me some loan, okay, for which I gave you a promissory note. And on time, I did not repay you that loan. Will you keep quiet? You'll definitely go and file a suit in the court of law. And that's why we always say that actionable claim is something like an unsecured debt or a claim which can be enforced in the court of law. A claim which can be actioned in the court of law is known as an actionable claim. Very, very interesting point. Good. Some question is there? Dry cleaning is job work. Yes, dry cleaning is a job work. We give the materials and get the work done. One more question. So please give example related to interstate movement of conveyance. I'll discuss that. We are going to come that next. Next. activities performed by panchayat, municipality, that is also not taxable. Next one, you just asked about interstate movement. This point I'll explain. Listen carefully. Sure. Let's take a small example like this. There is Raj Bakers. Come on, what is that word, sir? Raj Bakers. Yeah, before the one more query, actionable claim. My dear friend, already I gave an example for actionable claim. It's an unsecured debt enforced in the court of law. Classic example, loan given, promissory notes and all. Next, one more question. Sir, sale of building by construction business entities in normal course of business is also not a supply. That will be a supply. But I already told you, provided it is sold prior to completion certificate. If it is after completion certificate, then no question of GST. So for example, if somebody's business activity is buying and selling of lands, only lands, then GST will not apply. How much ever is the turnover, GST will not apply. And if somebody's activity is constructing apartment and selling, if he is constructing apartment and all the flats are sold after occupancy certificate, then also GST will not apply. Hope you got it. Done. Sir, Raj Bakers is in Telangana state. And there is also Raj Bakers in AP. Now, technically, under GST law, both are regarded as distinct persons. Because even though same persons, still you should take separate GST registration. Because under GST law, registration is to be taken state-wise, but not centralized. Now here, listen carefully. There is some stock transferred in a vehicle. Now, what is interesting point? When there is a stock transfer in a vehicle, on that stock transferred, GST will apply because it is supplied between distinct or related person in the course of furtherance of business. But please note a point that GST will apply on the stock, but not on the vehicle value. Because vehicle is not being supplied. Vehicle is only being used as a mode of transport for transporting the goods. So GST will apply on the stock, but it won't apply on the vehicle value. But on the vehicle, if any repairs or maintenance is being carried out, on the vehicle, if any repairs or maintenance is being carried out, then GST will apply on the value of such repairs or maintenance. Going back here, see how. Interstate movement of various modes of conveyance between distinct persons carrying goods, passengers, or both, or for repairs or maintenance. Such interstate movement is neither supply of goods nor supply of service. So GST is applicable on the value of the goods being carried in that conveyance. So GST will apply on the goods in that conveyance, but not on the vehicle, unless that vehicle is only for further supply. If the activity is only buying and selling of vehicles, then the story is different, altogether different. Next point. Grant of license for liquor. State government gives license for operating liquor shops, my dear friends, or operating liquor stores. For that license, person is required to pay some licensee fee. And they clarified that service by state government by way of granting license is neither a supply of goods or supply of service. And therefore, GST will not apply on that transaction. Clear, friends? And excellent, you see the small explanation. Alcohol liquor for human consumption is kept outside the GST. And thus, even granting a license for consideration of license fee is also kept outside GST. State government license for any other goods will attract GST. This exemption, what they gave, is only and only with respect to what, my dear friends? Alcohol liquor for human consumption. Next, one more question. Sir, by having one PAN, we can take registration for two different business. Yes, we can take. Please remember one point. That is, separate state, separate registration is mandatory. But in one state, if you have different business in different places, separate registration is not mandatory. If you want to take, you can take. It's optional. So in one line, what we say is that separate state, separate registration is mandatory. But for multiple places of business within the same state, for what place of business? For multiple places of business within the same state, For multiple places of business within the same state, separate registration is not mandatory. It is purely optional. It is purely optional. I hope you are getting clarity, my dear friends. So for multiple places of business within the same state, separate registration is not mandatory. It is purely optional. Make sense? I hope your query is clarified. Jan. Next, powers of central government. There are some powers with central government to treat a transaction as supply of goods and not supply of service, or supply of service and not supply of goods. That power is there with central government. Why they kept this point? Because in future, if any fight comes, this is goods. No, this is service. No, this is goods. For that reason, they kept a power in the government so that they clearly can clarify that this is goods and not service, or this is service and not goods. Yeah. One more question. Sir, if you get takeaway from restaurant, is it goods or service? My dear friend, let me tell you, food activity is always treated as supply of service. There was too much of fight going on prior to GST that this is good, this is service, this is good, this is service and all. But under GST law, it is clearly a service and GST will apply. Will apply. Next. Sir, movement of conveyance vehicles not liable to GST but spare parts tools. Yeah, the story of that is very clear. As I told you already, in case of interstate movement of vehicles and all, GST will apply only for repairs and maintenance, but not for the tools and all. Not for spare parts and all. Because, my dear friend, you have to apply the common sense. That is, when a vehicle is carrying the goods, obviously what will happen? The vehicle will deliver the goods and vehicle will come back again, right? So why should GST apply on the vehicle? GST will apply only on the goods which are being transported in that vehicle, but not on the vehicle cost. Make sense? Good enough. Next. Composite supply, mixed supply. I'm sure students are masters in the concept of composite supply and mixed supply. Friends, what is composite supply, mixed supply? Composite supply is that supply where two or more taxable supplies are naturally bundled, and one of which is a principal supply. What is principal supply? Principal supply is that supply which is predominant in nature and others are only ancillary. Classic example, when we go for hotel stay, for accommodation for night stay, morning they give complimentary breakfast. Breakfast is only ancillary. Accommodation is principal supply. One more example, when we go for aircraft through flight journey, they provide some snacks during the course of journey. The principal supply is only transportation service. Snacks provided is only ancillary. So this is called composite supply. And always to be noted, composite supply is taxable at the rate of principal supply. And when I talk about mixed supply, what is mixed supply? Mixed supply is that supply which is not naturally bundled and it is not a composite supply. And mixed supply is taxable at highest rate. But one important condition to be kept in mind, that is, in order to call it as a mixed supply, two or more supplies are given together for a single price. For example, there is a dry fruit box. In a sweet shop, there is a dry fruit box where there are 3-4 different dry fruits packed in one box for a single price. That is clearly a case of mixed supply because they are not naturally bundled and there is no principal supply there. So we will see out of all the dry fruits, which one attracts highest rate of tax. That rate of tax will apply for the entire product. For the entire product, we'll apply that rate of tax. Such a clear-cut, terrific point, my dear friends. No doubt about it. Are we clear? Excellent. Next. Mixed supply what rate? Highest rate of tax. Some special cases, artworks point we discussed. Retrading of tires. There is predominantly supply of service. For example, if a vehicle gets punctured, we get the repair done. Correct? And that bank uses some materials also. But predominantly, what is it? Service. Then printing on letterheads. That is clearly supply of goods. Printing of pamphlets, brochures and all. That is supply of service. Friends, I hope I'm understanding everybody. Yes, next. Servicing of cars. In case of servicing of car involving supply of both goods and service, where the value is shown separately. If it is shown separately. CBIC clarified. What is CBIC? Central Board of Indirect Taxes and Customs. They have clarified that goods and services would be liable to tax at the rate as applicable to such goods and services separately. So we will charge them to tax separately at separate rate of tax. Gift or donation, already we discussed. Free samples. Samples which are given free of cost without consideration do not qualify as supply unless it is covered under Schedule 1, because Schedule 1 deals with transaction regarded as supply even though there is no consideration. Then finally, buy one, get one free offer. So ultimately, we are all Indians. We love offers. If somebody says 50% discount, we feel extremely happy. And whenever we see buy one, get one free, initially it looks like, wow, one is coming free. But actually, it's not free. Because what they do is basically 2 products price, they combine one product and give other one free. That's how they do business. Who will give free, boss? Sira. It may appear at first glance that in case of offers like buy one, get one free, one item is being supplied free of cost without consideration. But in fact, it is not an individual supply of free goods, but a case of 2 or more supplies where a single price is being charged for the entire supply. Clear? And taxability will depend upon whether it is component supply or mixed supply. Component supply tax at the rate of principal supply. Mixed supply tax at highest rate. Clear? Next one. Taxability of what rights? Tenancy rights. What is tenancy right? Tenant acquires tenancy right in the property against payment of premium. Landlord may be the owner of the property, but the possession of the same lies with tenant. Tenant will pay periodic rent to the landlord as long as he occupies the property. And tenant also usually has the option to sell the tenancy right of the property, and in such case has to share a percentage of the proceed with owner of the land as laid down in the agreement. And it's clearly clarified that activity of transfer of tenancy right against consideration is covered under scope of supply of service. Obviously, right. So if any right is transferred, that is clearly a case of supply of service, no doubt about it. And that will definitely attract tax. Make sense? That's it. That is the story of this beautiful topic, my dear friends. That is the concept of supply, which I definitely wanted to spend some good time. The reason being that this topic has got some good amount of weightage in the exam, where high possibility that question may trigger in the exam. Make sense, friends? Good enough. Come on. Let me proceed to another interesting topic, charge of GST. Come on, what is the topic name, my dear friends? Charge of GST. Section 9. Section 9 deals with chargeability of GST, my dear friends. Come on. First of all, in this topic, my dear friends, there are 2-3 interesting concepts what you have to know. And I'm sure you would have heard about this. That is one section called 9.5, there wherein it says that in case of certain notified services through e-commerce operator is liable to pay GST. What are those notified services? Number 1, services of transportation of passenger by way of radio taxi, motor cab, maxi cab, motorcycle. Correct? Number 1. Number 2, services of hotel accommodation, except when hotel is liable to be registered. Number 3, services of housekeeping, except when person supplying service is liable to be registered. So for the 3 notified services, supplied through e-commerce operator, e-commerce operator is liable to pay GST. That concept is given by 9.5. And in 9.3, we have got list of services which are covered under RCM. And finally, in this topic, we'll learn about section 10, that is composition scheme. Clear? First, let's look at what are the services which are covered under RCM. Are you ready, my dear friends? Yes? Come on. What is section 9.5? For certain notified services supplied through e-commerce operator, e-commerce operator is liable to pay GST. What are points covered there? First one, transportation of passenger by radio taxi, motor cab, maxi cab, motorcycle. Motor cab means a vehicle meant to carry not more than 6 passengers. Maxi cab, vehicle meant to carry more than 6 passengers, but not more than 12 passengers. Motorcycle, two-wheeler, Rapido. Yeah, and for cars, Ola, Uber and all. Next, services by way of accommodation in hotel. What are the apps for accommodation in hotel? Go Bibo, Make My Trip. So many apps are there. Accommodation in hotel, guest house and all. Except when person supplying service to the e-commerce operator is liable for registration. One more example, OYO rooms. Next, services by way of housekeeping, plumbing, carpentering and all. Except when person supplying service is liable for registration. Classic example, Urban Club, which is now known as Urban Company. You would have heard these names, my dear friends. Yeah, Urban Company is one platform where you can actually order for carpenters, plumbers, various housekeeping service you can take from Urban Company. Next point you see. If e-commerce operator does not have physical presence in India, then representative in India is liable to pay GST. And if they do not have a representative, they must appoint a representative and make him liable. This point they have brought in law specifically to target a company known as Uber, because Uber makes terrific money even without having vehicle in India. They are acting as aggregator. So today's date technology is so much developed where we know that Book My Show does not show any show. Swiggy does not cook any food. Redbus does not operate any bus, but they're actually doing business because they're acting as a e-commerce platform. Service provider doesn't know service receiver. Service receiver doesn't know service provider. But e-commerce operator knows both of them. That is how he's able to do the business. So 9.5 talks about 3 notified services supplied through e-commerce operator. E-commerce operator is liable to pay GST. And if e-commerce operator does not have physical presence in India, their representative in India is liable to pay GST. And if there is no representative, they'll appoint a representative and make him liable. That is the story of section 9.5. 1 minute. I hope the point is very clear, friends. Brilliant, fantastic. Next. Tax payable under RCM. What is RCM? Reverse charge mechanism. So, my dear friends, not that every case supplier is liable to pay GST. There are some special cases where supplier is not liable to pay GST, receiver is liable to pay GST. And I'm sure you would have heard about the various categories which are covered there. GTA services, that too only if they opt for 5%. RCM will come only if they opt for 5% rates. If they opt for 12% rate, there is no question of RCM. See this simple summary. GTA, option 1. What is GTA? Goods Transport Agency. What is option 1? Forward charge 5%. Option 2, RCM, forward charge 12%. RCM, 5%. But if receiver is unregistered individual and all, it is exempt. Specified person, then only liable. Who is specified person? Factory, society, corporate society, registered person, company, partnership firm, casual taxable person. So GTA service, RCM will come into picture if GTA opts to pay tax at the rate of 5%. But if the GTA opts to pay tax at the rate of 12%, then there is no question of RCM. GTA only will be liable to pay tax under a forward charge. What is forward charge? Forward charge is those cases where supplier is liable to pay GST. And reverse charge is those cases where supplier is not liable to pay GST, recipient is liable to pay GST. Those cases are known as reverse charge mechanism. Next. Second one, legal services. That is also covered under RCM. Third, arbitrary services, arbitral tribunal. What is arbitral tribunal? Legally recognized panel of one or more adjudicators which is convened and sits to resolve a dispute. by way of arbitration in less formal environment than a court trial. Adjudicators are usually professional, experts in law and mediation. Next point, fourth point, very, 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 very important. Sponsorship service. High possibility question will come. Sponsorship service, RCM will come into picture only and only when receiver is a body, corporate or firm. If receiver is an individual, if a receiver is individual, friends, for sponsorship service, if a receiver is individual, then straight away they told in the law, no RCM. Friends, RCM will come into picture. RCM will come into picture for sponsorship service only when receiver is a body, corporate or firm. Are we getting clarity, friends? So for sponsorship service, RCM will come into picture only when receiver is a body, corporate or firm. Make sense, everybody? Next point. Services by director to a company. And obviously, my dear friends, every director is not an employee. If he is employee, there is no question of GST, because we know that services by employee to employer is covered under Schedule 3. That is, service by employee to employer in the course of employment is neither regarded as supply of goods nor regarded as supply of service. But if it is professional charges where 194J TDS is there, then definitely RCM will come into picture. So whenever company is paying remuneration to director, if they are doing TDS under section 192, then RCM will not apply. But if they are doing TDS under section 194J, then definitely RCM will apply. Friends, what is the language, my dear friends? If they are doing TDS under section 192, then RCM will not apply. But if that RCM will not apply, moreover, tax also will not come. But if they are doing TDS under 194J under professionals category, then definitely RCM will come into picture. Clear, everybody? Good enough. Next, insurance agent, recovery agent, music composer, photographer. Then author to publisher. This is also covered under RCM, but they have got an option to pay under a forward charge also. But they cannot withdraw for a period of 1 year. Friends, clear? Next part. Services by members of overseeing committee to RBI. Overseeing committee basically, which is a committee set up by RBI, basically to administrate various functions and to give advices to RBI. And who is liable to pay GST then? RBI is liable to pay GST because this transaction is covered under RCM. Then services by individual direct selling agent. Direct selling agent are the people who will bring business to the banks. Business facilitator to banking company, business correspondent to the business correspondent, agent of correspondent to the correspondent. 14th point, important point. Security services. And RCM will apply only if 3 conditions are satisfied. Now, what are 3 important conditions? Number 1, service provider. What provider? Service provider is any person other than company. And recipient should be a registered person located in taxable territory. And recipient is not paying tax under composition scheme. Then only the story of this RCM will come into picture. So friends, for security services, RCM will come into picture only if and only if supplier is other than company, recipient is a registered person. Then only RCM will come into the picture in case of security services. Making sense, my dear friends? Next point. Services supplied by way of transfer of development rights or floor space index for construction of a project. Then long-term lease of land. How many long-term years means what? 30 years or more. So this transaction is also covered under RCM. Then services by central government, state government, unit territory, local authority to business entity. That is also covered under RCM, except renting of immobile property, provided recipient is unregistered person. Department of Post by way of Speed Post, Express Parcel Post, Life Insurance and Agency Services. Then service in relation to aircraft or vessel, transportation of goods and passenger. These transactions are not covered under RCM. Next, 18th point, very important, latest point, which is under RCM. Services by way of renting of motor vehicle. Don't read entire point. Just look at the simple table diagram. GST is payable at forward charge if supplier is other than body corporate, recipient also other than body corporate, or supplier is body corporate. So when will RCM come into picture? RCM will come into picture. I repeat once again. RCM will come into picture only if supplier is any person other than company and receiver is a company. Supplier is any person other than company, receiver is a company. Then only RCM will come into picture. So friends, for renting of motor vehicle, RCM will come into picture only if supplier is other than company and receiver is a company. Then only the story of RCM will come into picture. Then lending of securities under securities lending scheme of SEBI, where you can lend your shares and securities, where somebody will borrow that shares and securities. GTA point we covered. Classification is not relevant for us. What is important is composition scheme. Definitely important. Listen, friends, let me spend some good time on discussion about now section 10. Something important. What is section 10? Friends, let me tell you, section 10 deals with the concept of composition scheme. What scheme? Composition scheme. In this 10, I'll divide that into 10-1, other side 10-2. In 10-1, there are 3 categories of persons: manufacturer, trader, restaurant and catering services. For manufacturer, it is 0.5% plus 0.5% of turnover. Now, what is composition scheme all about? In case of composition scheme, we will do quarterly payment of tax. Quarterly payment of tax, that too under a form called CMP 08, which we will file by 18th of the month succeeding the end of quarter. And the interesting concept in composition scheme is very clearly, my dear friends, that he cannot issue invoice. He will issue only a document called bill of supply. He cannot collect the tax. And he cannot claim input tax credit. The only thing he has to do is just to see his outward turnover. On that turnover, pay the tax. That's it. And manufacturer, it is what percent? 0.5% plus 0.5% of turnover. And for trader, 0.5% plus 0.5% of taxable turnover. That word is important. Which word? Taxable turnover. You observe carefully, in manufacturer, they told 0.5% plus 0.5% of turnover. But for trader, they are telling 0.5% plus 0.5% of taxable turnover. It is important to be kept in mind which case it is turnover, which case it is taxable turnover. A question may come in exam. Third point, restaurant and catering service, 2.5% plus 2.5% of turnover. 2.5% plus 2.5% of turnover. So what are 3 categories covered here? Manufacturer, trader, restaurant and catering services. And who can go for composition scheme? Only those categories of persons whose turnover does not exceed 1.5 crores. And in some states, 8 states like Arunachal Pradesh, Meghalaya, Manipur, Mizoram, Nagaland, Sikkim, Tripura and all, some 8 states are there where it is 75 lakhs. But general limit is 1.5 crores. Clear, friends? An important point to be noted is that there are 2 ways how a person can come into composition scheme. One, at the time of applying for registration. Second, somebody is already registered under GST law. But one fine day he's telling, I want to go out of normal to composition scheme. Law is telling you can go from convert. You can basically convert from normal to composition scheme, but you have to apply before start of the financial year. That point is clearly given in the law. A person can convert from normal to composition scheme, but he has to opt before start of financial year. But if you do want to do reverse, that is, you want to convert from composition to normal, you can do any time, because government is extremely happy. Obviously, no, sir, because see, earlier you were paying tax on quarterly basis. Then we are telling I'll come to monthly basis. What government will tell? Wow, welcome, come on, welcome. But if you are telling from normal you go to composition, they are telling please apply before start of financial year. And moreover, the problem is if you go from normal to composition, law is telling get out. But whatever stock is there, first to pay tax and then get out. Obviously, because on that stock already you would have enjoyed input tax credit. That credit what you enjoyed, that you pay to government now. Reverse case, you are converting from composition to normal. When you were in composition, did you take credit? No. But now you are coming into normal. Now is telling, wow, when you are converting from composition to normal, whatever stock is there on that stock, please take credit. Enjoy. Such a brilliant benefit law has given. But one point, manufacturer of some goods cannot take composition scheme. And let me tell you, those goods are pan masala, tobacco and tobacco substitutes, pan masala, tobacco and tobacco substitutes, ice cream and other edible ice. Pan masala, tobacco and tobacco substitutes, ice cream and other edible ice, whether or not containing cocoa, aerated waters. Those people cannot go for composition scheme, my dear friends. Are we getting clarity, everybody? So manufacturer of those goods cannot go for composition scheme. Are we clear, everybody? Excellent. Then one more interesting point, my dear friends. Any person who is engaged in interstate outward supply, then also he cannot take composition scheme, because composition scheme person can do interstate inward, but he cannot do interstate outward. So if somebody is doing interstate outward, he can't take composition scheme. And the same lines, CTP and RTP, that is casual taxable person, non-resident taxable person, they also cannot take composition scheme. That part also is given in the law. Are we getting clarity, friends? Other side, there is about 10(2)(a), which is applicable to other service providers. For example, chartered accountants, interior designers, cost accountants, any kind of person, other service provider. But this will apply only if turnover during preceding financial year does not exceed 50 lakhs. Somebody is asking, sir, what does aerated water mean? Aerated water means basically cool drinks, which has got gaseous substance like Pepsi, Coke, Thumbs Up and all. Clear? Next. So 10(2)(a) applies only to other service providers whose aggregate turnover, aggregate turnover during preceding financial year did not exceed 50 lakhs. Then current year, up to 50 lakhs, they can pay tax at the rate of 3% plus 3%. Slightly higher compared to section 10(1). In fact, in 10(1), it's only 0.5, 0.5, 0.5, 0.5, restaurant 2.5 plus 2.5. But here, it is not 0.5, 0.5. It is 3% plus 3%. Very much higher percentage compared to section 10(1). Very interesting concept, friends. High possibility that one question can come in exam from composition scheme, because there is one such topic which generally keeps coming in the exam. Make sense? Brilliant. Let's proceed. Next. So as I was telling my dear friends, 75 lakhs applies to Manipur, Mizoram, Sikkim, Arunachal Pradesh, Meghalaya, Nagaland, Tripura and Uttarakhand. For these states, it is 75 lakhs. But for rest of states, it is how much, my dear friends? 1.5 crores. And 50 lakh story is in case of services. And rate of tax, manufacturer 0.5 plus 0.5 of entire turnover. Trader 0.5 plus 0.5 of only taxable. Restaurant 2.5 plus 2.5. Service provider 3% plus 3%. That concept you have to definitely keep in mind. Getting clarity, everybody? And some basic points, which I already told you. He cannot collect tax from customer. He will only issue bill of supply. He has to display that he is a composition taxable person. And notice board also he has to mention he will pay quarterly tax. And that too, the form I told you, CMP 08. This point is important. A small question can come. All registered persons having same PAN. All registered persons having what PAN? Same PAN have to opt for composition scheme. That means what? So for example, sir, a person has got business in Telangana as well as Maharashtra. He is telling Telangana, I will take composition scheme. Maharashtra, I'll be under normal scheme. Or reverse case, Maharashtra will take composition. Telangana will be under normal. Law is telling that is not allowed. That is not allowed. All the registered persons under same PAN should either be under normal scheme or should either be under composition scheme. You cannot tell one state I will take normal, one state I will take composition. That facility is not there in the law. Make sense? There is no restriction to receive interstate inward. That I already told you, interstate inward is okay. Interstate outward is not okay. Next. Exempt services by way of extending loans where the consideration is interest or discount is not considered for calculating aggregate turnover. So for calculating that 1.5 crore, 75 lakhs and all, we will not take into account this exempt service where the consideration is interest or discount. Next point, computing limits for other services. What is this point? Let me explain. So in 10.1, we discussed that there are 3 categories. What are 3 categories? Manufacturer, trader, restaurant and catering. Now law told they can provide some other service also and they can still continue under composition scheme. I repeat, my dear friends, what they told in the law is that they can provide some other services and they can still continue under composition scheme. Now, what is that some other services? Any service you can provide and you can stay under composition scheme. But the value of that service should not be more than 10% of turnover in state. 10% of turnover in state in preceding financial year or 5 lakh rupees, whichever is higher. Now let's take a small example to understand this better. So let's say there is one person, Mr. A. 1920 turnover is 120 lakhs. So 2021, he opted for composition scheme. Can he do that? Answer is yes. Because previous year turnover did not cross 1.5 crore. So he has taken composition scheme happily. But in 2021, along with the trading activity, he is also doing interior designing service. Law is telling, my dear A, you are doing interior designing service. Actually, 10 is applicable only to whom? 3 categories of persons. Who are 3 categories? Manufacturer, trader, restaurant and catering service. Correct, my dear friends? Exactly. Law is telling, no problem. Still you can continue under composition scheme. But this interior designing service should not be more than 10% of turnover in state in the preceding financial year or 5 lakhs, whichever is higher. That is nothing but 12 lakhs. That means law is trying to say that along with manufacturing or trading or restaurant or catering service, you provide some other services. You are providing some other services, but you can still continue under a composition scheme. You are providing some other services, but you can still continue under a composition scheme. But that some other services should not be more than 10% of turnover in state in the preceding financial year or 5 lakhs, whichever is higher. Next, one question. Sir, we include all intrastate supplies while calculating aggregate turnover, but intrastate supplier cannot take composition scheme. 100% correct statement. See, to look at aggregate turnover definition, they use the word all taxable supplies, exempt supply, intrastate supply, and exports on all India basis under same ban. In aggregate turnover definition, they cover intrastate supplies also. But the problem here is, if somebody does intrastate outward supply, he cannot take composition scheme. That is a thumb rule. That is a fact. Next. Yeah, another student is asking, sir, is there a reason for 75 lakhs and 1.5 limit for different state? Generally, the limit is 1.5 crore only, but 75 lakhs they kept for the special category state, that Northeastern say specifically because those states are still more of developing in nature. That is the reason why they kept a lower limit there. Even in registration chapter, you would have heard that general limit is 20 lakhs, but for Manipur, Mizoram, Nagaland, Tripura, the limit is only 10 lakhs. Correct, right? You heard that point, right? Exactly. So those are the reasons why they keep lower limit for those kind of states. Going back. Who are not eligible? If somebody is supplying alcohol, liquor, or petrol products, they can't do that. Intrastate outward, they can't do that. If somebody is supplying through e-commerce operator, they can't do. This already I told. Ice cream, edible ice, pan masala, tobacco, aerated waters. That's just a comparison. 150 lakh story, 50 lakh story. This already I told. At any time during the day, apply for registration. But if you are converting, what you should do, my dear friends, from the beginning of the financial year, that means before start of financial year, you have to apply. Yeah, couple of questions. Except restaurant service means, can it exceed 5 lakhs or 10%, sir? Yeah, that's what I was trying to say you, my dear friend, that if you are doing some other service, you can still continue under composition scheme. But the value of that some other service, should not exceed 10% of turnover in state for the preceding financial or 5 lakhs, whichever is higher. Restaurant, we don't consider for the 10% limit because restaurant service can happily go for a composition scheme. Why do you want the 10% limit? Next, one more question. So we can say in actual, people don't practically include intrastate supply. Of course, for a composition scheme, they don't include. The reason being very clear that if you are doing intrastate outward, there is no question of entering into composition scheme. Next, somebody is just telling hello, wonderful, hi. Yeah, next. This normal to composition before start of the year. Composition normal anytime. Pay the credit already you enjoyed. Here what they are telling, avail credit, take whatever you want because you are coming from composition to normal. Government is extremely happy. Done. That's it. That is the story of this beautiful topic of charge of GST, my dear friends, where I definitely wanted you to understand some interesting points there. Clear, friends? I hope that is making sense for all of you. Yes, very good. So let me spend some interesting time on discussion about a small topic that is none other than time of supply. Friends, heard about this beautiful topic, right? Time of supply? A small topic which generally keeps coming in the exam for 2 to 4 marks. But very scoring, yeah? Yeah. Time of supply. Section 12, Section 13. 12 deals with time of supply in case of goods. 13 deals with time of supply in case of services. 12 is for goods, 13 is for services. Simple language, let us learn, my dear friends. That is, 12.2 is basically the general rule, which clearly says time of supply is directly date of invoice. Date of payment is not relevant. In case of goods, in case of what? Goods. there is no need to pay GST on advances. There is no need to pay GST on advances. That is the reason why date of payment is not relevant at all. What is relevant is only date of invoice. Date of invoice. Now, what is date of invoice? For that, they give a clarification. What is date of invoice? Date of invoice means actual date of invoice or actual date of invoice or last date when invoices, last date when invoices ought to have been issued, whichever is earlier. Come on, friends, what is the language I wrote, sir? Sir, in case of goods, there is no requirement to pay GST on advances. So obviously, my dear friends, for that reason, time of supply in case of goods is always what, my dear friends? Time of supply in case of goods is always date of invoice. Date of invoice. And what is date of invoice? Actual date of invoice. Actual date of invoice or last day when invoices ought to have been issued, whichever is earlier. And when invoices ought to have been issued, they clearly clarified that. In case where there is a movement of goods, invoice must be issued on or before date of removal. And if there is no movement of goods, invoice must be issued on or before a date of delivery or make available. And for continuous supply of goods, invoice must be issued when the statement is issued or payment is received. So please keep in mind, there is no requirement to consider payment date. Only requirement is to consider invoice date. And there is no need to pay GST on advances. Next. 12.3 deals with time of supply for RCM. And it says, earliest of following. Number 1, date of receipt of goods. Date of what, sir? Receipt of goods. Second one, date of payment. And what does date of payment means? Date when payment is entered in the books. Date when payment is entered in the books or date when payment is debited in the bank, whichever is earlier. Come on, what is the language, my dear friends? Date when payment is entered in the books. Date when payment is entered in the books or date when payment is debited in the bank, whichever is earlier. Date when payment is entered in the books or date when payment is debited in the bank, whichever is earlier. And that's important for a simple reason, because you please understand that we are looking from recipient point of view, not supplier point of view. Receiver point of view, amount will get debited but not credited. So what is date of payment? Date when payment is entered in the books or date when payment is debited in the bank, whichever is earlier. Clear, friends? So please speak out. Everybody, what is the first date? Date of receipt of goods. Second date? Second date is what? Date of payment. What is date of payment? Date when payment is entered in the books or date when payment is debited in the bank, whichever is earlier. Finally, third one, 31st day from date of invoice. So these three, whichever is earlier, that becomes the time of supply. Whichever is earlier, that becomes the time of supply. Getting clarity, friends? This is a story of time of supply for goods covered under RCM. Earliest to the following dates. So I repeat, 12.2 is what rule? General rule, which says what? Time of supply is date of invoice. What is date of invoice? Actual date of invoice or last day when invoices ought to have been issued, whichever is earlier. And for goods covered under RCM, date of receipt of goods, date of payment, or 31st day from date of invoice, whichever is earlier. 31st day from date of invoice means invoice date you have to ignore. After that, see 31st day, 30 days and next day. Date immediately following 30 days. That's why they told in the law 31st date. Then 12.4 or 13.4. 12 in case of goods, 13 in case of services. But the concept is same. where it deals with the concept of time of supply in case of vouchers. Voucher is something like a coupons, where they told there are two types of voucher, where supply is identifiable, supply is not identifiable. Example, if I give you a shirt voucher, that is clearly a case where identifiable voucher, because you can go and redeem the voucher only for the shirt. But if I give you a voucher where that voucher is a big bazaar voucher, where you can go to the supermarket and buy whatever you want, that's a case where supply is not identifiable. So if supply is identifiable, time of supply will be date of issue of voucher. And if supply is not identifiable, time of supply will be date of redemption of voucher. Friends, come on, I repeat once again. So if supply is identifiable, what is the answer, sir? If supply is identifiable, date of issue of voucher. And if supply is not identifiable, date of redemption of voucher. This concept is given in 12.4, 13.4. 12.4 in case of goods, 13.4 in case of services. Then 12.5 or 13.5, where 2, 3, 4 are not applicable. Something like a residual case. What case? Residual case. See the first one. If he is required to file periodical return. Come on, what is the language I wrote? If he is required to file what return? Periodical return. Then due date on which return is to be filed. Come on, friends. If it is required to file periodical return, what is the answer, friends? If it is required to file periodical return, the due date on which return is to be filed. Other side, if he is not required to file, if he is what? Not required to file periodical return, then time of supply is date on which tax is paid. Which date tax is paid, that day only will become time of supply. Which day tax is paid, that day only will become time of supply. So we require the periodical return, the due date on which return is to be filed. And if it is not required for periodical return, the date on which tax is paid. So which day the tax is paid, that day only will become time of supply, my dear friends. Next point. 12.6 or 13.6. Addition in value by way of interest, late fee, or penalty charged by supplier. Come on, who is charging? Interest, late fee, or penalty. This is very common in the market, where the supplier gives some due date to make the payment, and if recipient does not make payment on time, high possibility that supplier may charge interest or late fee or penalty. Clear, my dear friends? And they clearly told, for all this, my dear friends, time of supply will be the date when addition in value is received. So when you have received that interest, late fee, or penalty, the date of receipt of that, that day only will become time of supply, my dear friends. So this time of supply is very important. Why very important? Because the due date for payment of tax is 20th of next month. When I say next month, which date you have to see? Should I see invoice date, or should I see payment date, or which date should I see? So getting clarity? Should I see invoice date? Should I see payment date? Should I see service date? Which date should I take into consideration? That is the reason why this time of supply is important. Next, moving forward. So friends, if you observe carefully, the only thing left to understand is 13.2, 13.3. 13.3 is about RCM. Let me finish off this first, a small point. Earliest of following. Number 1, date of payment. Number 2, 61st day from date of invoice. There, what did we learn? What did we learn? There we learned about 31st day from date of invoice. But there were 3 dates. What are 3 dates? Date of receipt of goods, date of payment, 31st day from date of invoice. But here what is the answer? Date of payment or 61st day from date of invoice. These two, whichever is earlier. Sure. Days from the date of completion of service. In general, invoice must be issued within 30 days from the date of completion of service. Yes. So wonderful. What I was talking, my dear friends, is section 13, subsection 2, which is a general rule with respect to services. 12.2 is general rule with respect to goods, but 13.2 is the general rule with respect to services, which clearly says that in case where invoice is issued within time, what is within time? In general, the time limit is 30 days. In general, time limit is 30 days. But in case of banks, NBFC, it is 45 days. In general, it is 30 days. But for bank, NBFC, it is 45 days. So if invoice is issued within time, time of supply will be date of invoice, date of payment, whichever is earlier. And if invoice not issued within time, date of completion of service or date of payment, whichever is earlier. So if invoice is issued within time, date of invoice or date of payment, whichever is earlier. And if invoice is not issued within time, date of completion of service or date of payment, whichever is earlier. This is a story of services, which you definitely have to keep in mind. Clear? Everybody? I'll ask you one small question. Think properly and tell. Mr. X gave some service on 10/10/21 to Mr. A. Invoice is given on 6/11/21 and A made payment on 1/2/22. Tell me guys, what will be the time of supply? What will be the time of supply? Yes, come on. The only thing you need to check is whether invoice issued within time or not. When is service given? Service is given on 10/10. Invoice is given on 6/11. That means what? Within 30 days. Then time of supply will be date of invoice or date of payment, whichever is earlier, which is nothing but 6/11/21. Some friends are telling 10/10. I don't know why. Please understand that invoice is given on 6/11/21. That means what? It is issued within 30 days. It is issued within 30 days. But it is issued within 30 days. What is the answer? Date of invoice or date of payment, whichever is earlier. If invoice is not issued within 30 days, then date of completion of service or date of payment, whichever is earlier. Please get a complete clarity, my dear friends. Yeah, very, very interesting, short, sweet, and cute topic, time of supply. Clear? So friends, with this discussion, we have had some good amount of round of revision with respect to topic of introduction to GST. We have discussed the concept of supply. We have done about charge of GST RCM. We have done about the concept of composition scheme. We have also discussed about time of supply. Now, my dear friends, for effective and better understanding of the concepts and provisions, one small change in the plan of action, that is, we are going to stop here today. The session will be closed today for this time. And for tomorrow, again, we'll have one more session in the evening from 7 p.m. to 9 p.m. So that one more live session will be there tomorrow evening from 7 p.m. to 9 p.m. so that we can have one more round of session on the concepts, so that one more session will give us more clarity on the balance concept, because I don't want to load all the concepts at a time on the same day. That is the reason why we decided to do one more part of revision. Part 2 will come tomorrow. Clear, my dear friends? Tomorrow evening from 7 p.m. to 9 p.m. Don't miss out. Stay tuned for discussion on revision of the concepts of beautiful topics of value of supply, input tax credit, and some clear-cut interesting points in the topic of tax invoice, e-way bill and all. That also will spend very good time. Clear, my dear friends? Yeah, somebody is asking, sir, could you explain TOS on part supply? If there is a part supply, for each part, we should determine TOS separately. That's it. Clear? Wonderful. Thank you so very much. Have a great, wonderful, balanced time. And see you all guys tomorrow evening at 7 p.m. 7 p.m. to 9 p.m. 2 hours. We'll have a great round of revision on the balanced topic left in our syllabus, along with interesting amendments. Thank you so much. Bye-bye.